sector. We spoke to IOC as well. So let's take that conversation forward with Probal.
Indeed, and Probal Sen is joining in, the energy analyst at ICICI Securities, to take this conversation forward. Probal, good morning. Thank you for joining in. What is the expectation from the PNGRB this time around when it comes to this unified tariff? Was it not already announced earlier? And what is the difference that is expected this time around from the PNGRB?
Honestly, one will have to sort of, firstly, yes, it was something that has been discussed, and they had put out the PCDs or the public consultation document on this earlier as well. I guess the visibility on when those norms could finally be pushed out is probably getting clearer. That is what is getting the street excited. The difference basically is, once you have a unified tariff and you have preferential tariffs specifically for companies supplying to the priority sectors, that obviously will be a benefit to the CGDs. And obviously what is being spoken about in terms of the distance, the way that the zonal tariffs will basically be now determined, that can make some of the players like MGL, which are on the further end of the, or rather, which were getting slightly better tariffs earlier, those may have to pay slightly higher to basically smoothen out the tariff. I think that is broadly what, could happen with the unified tariffs. We'll obviously have to wait and see what the final tariff order could actually look like. But, the visibility and the speed at which the reforms are now starting to move, I think that is what is making the street optimistic.
Okay, so how soon can we expect a final decision, Probal? Any indication by when can we see a decision coming in from PNGRB?
I wouldn't want to speculate on the exact timelines. I think when GAIL in its Q4 briefing, post-analyst had said that its final tariff order could come sometime by June or July. And they had, they've recently also, been stating that once these unified tariff norms and all are released, after that, their final tariff order would come. So one would expect that in the next couple of months, you would expect these regulations to actually finally come through. But, I wouldn't want to speculate on the exact time frame.
Of course, you would never know when and how it would pan out. But Probal, GAIL has asked for a 33% increase. Jefferies had put out a note where they expect around 10 to 15% increase. What's your idea? How higher could the tariffs be from what GAIL has asked? Will the street be will take it negatively? It's less than 10% or something?
Yes, I think there's a reasonable expectation that around 15% kind of a tariff increase might come through. That is what we are anyways building into our base case estimates. So obviously anything less than that is something that could negatively impact the street. It's very, very difficult at this point to say what would be the final tariff that is allowed. If you look at the representation made by them with respect to the gas cost assumptions that were made, purely changing only that assumption to a more realistic gas cost, from about 3.2, which was used in the earlier tariff order, to basically current prices of even subsidized gas, even though they don't really have any access to subsidized APM gas now, but even taking it up to about $7, that itself can actually give them 12 to 15%. So on the basis of that assumption, one would expect that 15% plus tariff increase should come. But then, this is a comprehensive tariff order. There could be other assumptions on costs, capex, everything else. And it's very difficult to sort of then pin it on exactly what assumptions the regulator can have a relook. But on the basis of the gas cost assumption, which is what one of the primary things that GAIL had asked for a review on, I would say 15% is a very, very likely number, and anything less than that would disappoint the street.
Probal, you were speaking to Indian Oil Corporation earlier in the day, and they have also mentioned the fact that their proposed project with CPCL might not go through, and that could be a petchem project as well. But being the largest refiner that it is, how does that impact its refining volume guidance going forward in case this project does not go through as they are anticipating?
I think even if you take out CPCL's proposed refinery throughput addition, the standalone additions that they're doing at multiple refineries, those itself will actually increase overall throughput to well over 85 million tons from the 70 million tons that they have. So, that places them, fairly comfortably as far as meeting their growth requirements. More importantly, I think what they have been doing, or what they have stated as their goal over the medium to long term, is to gradually move to a much higher petrochemical intensity. from the current levels of 3 to 4%. What they've been speaking about is they want to get to 15% petchem intensity by FY30. So the decision to basically change the parameters of the CPCL expansion to maybe a petrochem heavy one, I think is in line with those goals to basically move to more and more towards petrochemicals and new energy and move away from, or at least reduce the dependence on traditional refined products for their earnings. So I think that's something that is, we wouldn't necessarily look at it as a negative at this point of time.
Okay, so it's not a negative at this point in time. Finally, before we let you go, Probal, what are the top picks? Which segments? There are so many in the oil and gas space, be it the upstream oil companies, OMCs from the gas space or gas utilities. Which are your top picks right now and why?
We continue to, I think, be positive on MGL. We continue to be positive on GAIL. We believe, I think OMCs as a pack, I think seems very good to us at this point of time. In the upstream space, I think Oil India probably is a more preferred pick than ONGC, purely because operationally we believe Oil India can probably deliver slightly stronger numbers at this point of time. MGL, even if the tariff is a bit of a negative, I don't think it impacts their overall numbers or margins or the growth story, frankly. To a huge extent. Yes, the stock has run up, so there is a correction that's ongoing, but we would use a major correction as an opportunity to get in, even at these prices.
Using a correction as an opportunity to get in. Probal, thank you so much for sparing time and joining us today with your views on what to anticipate from the PNGRB and, of course, your top picks within the segment as well. Well, earlier we did speak to Arvinder Singh Sahni, who is the chairman of Indian Oil Corporation, and asked him about their update on the Nagapattinam project, and listening to what he had to say.
The Nagapattinam refinery is, we have gone back on the drawing board because the viability of that refinery was not becoming very good. So now we have gone back on the drawing board and we are putting into more and more petrochemicals into it. So it might change the financial outlay, but it will be more of a petrochemical plant now going forward instead of a pure refinery play. So we are reconsidering our configuration, and again we will go back to our board for taking approval for that and then move forward.
Okay, all right, that's the word coming in from Indian Oil Corporation. All eyes on that project with Chennai Petro. We'll do one thing, we'll slip into a short break now. Up next, we'll discuss what's buzzing in the commodity space with Manisha Gupta. Stay tuned for that. Thanks for tuning in to CNBC TV 18, and for more news and updates, follow us on all the social media platforms.